In this video, you're going to learn the 4 most important things to buying a home in Las Vegas, and stick around to the end because I'm going to give you a bonus tip that's really important. Let's get into it. Hey guys, this is Jerry Abbott with Simply Vegas Real Estate here in the beautiful city of Las Vegas, Nevada. If this is your first time on the channel and you want to learn everything there is to know about the Las Vegas real estate market, just click that subscribe button down below and click the little bell notification next to it. That'll inform you every time I put up a video, which will be happening every week. Honestly, I get calls here every single week from people wanting to relocate and buy homes here. So if you're interested in possibly relocating to Las Vegas and you're looking to buy a new home, I'm your guy. I've lived here for 17 years. I know every inch of this city. Just call, text, or email me anytime. Okay, so the first thing on the list that you need to know before buying a home here, especially in Las Vegas, is try to have an emergency fund. If you can, try to get about 3 to 6 months worth of emergency fund savings put together. So let's just say, for example, you have $3,000 a month in monthly expenses. What you want to do is take $3,000 times, say, 3 months, that's $9,000. If you do 6 months, that's $18,000. 6 months is preferable, 3 months is the minimum. You definitely want to have an emergency fund, especially in a place like Vegas, because you do tend to spend a little bit more money out here, especially when you move here, just trying to get used to the city. So definitely try to get at least 3 to 6 months of an emergency fund put together before you buy a home here in Las Vegas. Okay, so number 2 on the list is try to save for a down payment on your home and try to save at least 20% for that payment. So let's say you're buying a $400,000 home here in Las Vegas. If you have $80,000 to put down on the home, that's a great starting point, because if you go less than 20%, I mean, you could do 10% if you want, or 5%, because they're all different types of programs, but anything less than 20% means you have to involve private mortgage insurance. And private mortgage insurance basically means you're going to have to increase your payment a little bit until you have enough equity in the home. So if you can put 20% down on the home, that's the best thing for you to get started so you don't shortchange yourself.
Real quick, from the last segment, I was talking about a down payment. I wanted to show this to you and illustrate it a little bit better. Take a look at this $300,000 home example. The interest rate here is a little bit high because we're lower right now, but I just wanted to illustrate this a little bit better. When you got 5% going down versus 20% down, okay, $15,000 would be the number here at 5%. $60,000 would be the number at 20%. But you can see there's a big difference on your monthly mortgage payment. $1,950 versus $1,548. That's a $400 a month difference. And the reason why is because principal interest alone, you're definitely going to be higher because you're putting less money down, so you have more mortgage to carry. Here, you've got a lower payment because you put more down. But what you really want to look at here is this number right at the bottom, $181 versus 0. That's the private mortgage insurance that you have to pay monthly because you only put 5% down versus the 20% down. Now, that's not a big deal. If you want to carry a little bit extra on the payment, you can do that, because some people just can't put more than 5 or 10% down. They don't have the 20%. But I just wanted you to see the difference in the payment situation based on when you put down 5% versus 20% in this example.
Okay, so number 3 on the list is try to get your credit as high as you can. So a lot of people deal with obviously some credit issues. If you can get your credit score up to at least in the 680 to 700 range or higher, you're going to be in really good shape. And the reason why I tell you that is the higher your credit is, the lower the interest rate you're going to get. And in the following chart, I want to show you the difference and what it's going to be depending on your credit rating, how much money you're going to save just based on what interest rate you can get when you have really good credit, average credit, and then poor credit. There's a very big savings. So check out this chart so you can take a look. Okay, so we're on bankrate.com and we are using a loan savings calculator example here on a 30-year fixed loan with a $200,000 mortgage example amount. So over here are your FICO scores. Here's your interest rates, your monthly payment, and your total interest paid on the loan. So let's just start at the top. If you have the best credit right here, you get the lowest interest rate at about 2.7%. Your monthly payment is $814, and the $93,000 right here, that's what you pay over the life of the 30-year loan on a $200,000 amount, okay? Now let's just say you're mid-level, 680 to around 700. Your interest rate's a little higher, your payment is a little bit higher, but the interest now really starts to go up from 93 to 108. You're talking about $15,000 difference. Now let's just go down to the bottom as an example. Let's just say you have one of the lower FICO ratings, 620 to 639. Now you're definitely at a higher interest rate, a higher payment, and just look at this interest amount. Now you're at $157,000
of total interest that you have to pay over the life of a 30-year loan compared to $93,000 if your FICO is better. So this is why I'm talking about if you can get your FICO score to the highest point, maybe not here, but even up here, you're going to end up paying so much less interest over the course of this 30-year loan compared to being down here at this current rate. So try to get your FICO score and get your credit as high as possible so you can get better interest rates, better monthly payments, and pay a lot less interest.
Okay, so number 4 on the list, when buying a home here in Las Vegas, it's really important, and it might seem basic, but you need to buy a home that you can afford here. Sometimes the careers of people that live in this city are not as long-term as other major metropolitan cities. So it's really important that you use your head and you buy something that you can comfortably afford. That's really basic, but it's also really important. And you'll be able to gauge that based on your income and when you deal with your loan person to determine that. But it's really important to look for something that's comfortable for your monthly payment. Definitely buy something that you can afford. Don't go in over your head. Okay, so the bonus tip that I want to tell you about is that if you live out of state and you're looking to buy a home here in Las Vegas, look for a home in Las Vegas while you're still employed in the current state that you're in, because your current job is going to give a better platform for you from a financing standpoint to get yourself into a home in Las Vegas. So start looking for a home for your Las Vegas residents while you're still employed in the state that you currently live at with the current job that you're at, because that's going to help you when you look for financing to get into that house in a much easier manner than if you come to Las Vegas without any job set up here just yet and you try to get your financing set up in Las Vegas when you move here. Do it before you come to Las Vegas in the job that you're currently in. Okay, so that pretty much wraps up the 4 most important things plus the bonus tip on moving to Las Vegas before you buy a home here. Definitely follow these tips. I'm a realtor here with Simply Vegas Real Estate. I know every inch of this city. I help people relocate here all the time. So if you want to find that perfect home and you're looking to relocate to Las Vegas, contact me at the information you see on the screen. Just call, text, or email me anytime.